We just got some big news from the Bureau of Labor Statistics regarding the health of the U.S. economy. And in today's video, I'm going to be going through the daily roundup of key U.S. economic data for November 1st. Now, you may not be watching this on November 1st, but this is for the first of the month, and this is going to be dealing with August, September, and October data. So with no further ado, let's dive right in. Daily roundup of key U.S. economic data for November 1st. The October employment report was mixed, with payrolls growth much weaker than expected. The unemployment rate steady, and hourly earnings growth faster. Non-farm payrolls rose by only 12,000 in October, after a 223,000 gain in September and a 78,000 increase in August, both revised lower from their previous estimates. So we got to stop here for a second. Non-farm payrolls rose by only 12,000. Now, they say only 12,000 because the expectations for this month were around 112,000, 113,000. So non-farm payrolls missed the mark by 90% in October. 90%. That is not a good sign moving into a massive day on November 5th. You know what's coming on November 5th. If you're watching this after November 5th, you know what happened, hopefully. Maybe it got decided that day. Maybe it didn't. I hope so. I think we all hope so. But not a good sign moving into a very big day on November 5th. Now, also here, we got 223,000 gain in September, 78,000 increase in August, both revised lower from their previous estimates. So these numbers were revised by 12% and 50% respectively. 12% in September, so that 223,000 is 12% lower than the number they originally put out, and 78,000 is 50% lower than what they put out in August, which means that the numbers are getting weaker. The payroll reports are getting weaker, and the trend is accelerating, especially when you see that 12,000. Not a good sign. The Bureau of Labor Statistics said that it could not quantify the impact of the two hurricanes that hit between the survey periods, but unadjusted data showed a significant jump in the number of workers that could not work due to weather and the number that had their hours cut. Fair enough. They just happened. We're probably not going to get the official data, or rather, we're not going to know the full impact of these events until much farther into the future. So fair enough. But that should have been baked into the cake, because it's not like this happened yesterday. It's not like this happened a week ago. This happened at the beginning of the month, or near the beginning of the month. They've had time to adjust their expectations, and they still had those expectations at 113,000. So why did it miss by 90%? Even if it missed by 75%, 50%, 35%, whatever the number is, that's a big miss. That's a gigantic miss. So to miss that badly, even with expectations perhaps being adjusted because of these two events, not a good sign. Private payrolls fell by 28,000, also well below expectations, and following $192,000 or 192,000 gain in September. So private payrolls falling as well. Another piece to the puzzle that does not look good. Temporary help service jobs decreased by 48,500. Manufacturing sector jobs decreased by 46,000, partly due to a strike at Boeing. Retail jobs fell by 6,000, and leisure and hospitality jobs declined by 4,000. So what are we seeing? Decline, 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 and decline. I thought it was 3 strikes and you're out. I guess you get 4, maybe you get 5. Seems like with the data over the past 2 years, you get an infinite number of strikes until, of course, the last straw breaks the camel's back. But we don't know when that's coming. We don't know if it's even going to come. Healthcare and social assistant jobs provide some offset, rising by more than 51,000 jobs. Shocker. Healthcare and social assistance jobs. Look at the trend. They're going to keep rising. Unless we get AI and robotics to replace all of these jobs, we'll probably still count those jobs anyway. But if we're only counting human jobs, unless the robotics industry takes over healthcare and social assistance, this number is probably just going to keep increasing for the next 5, 10, 15, 20 years, however long it's going to be. It's probably just going to keep going up. That's my opinion. Could be wrong, though, of course. The unemployment rate remained at 4.1 after rounding, but was actually 4.145 unrounded. Cool, whatever. Close to being published as 4.2. Great, don't care. The labor force fell by 220,000 as labor force participation declined. Household employment declined by 368,000, while the number of unemployed rose by 150,000. So the unemployment rate remained steady, but the number of unemployed rose by 150,000. The labor force fell by 220,000 as participation declined, and household employment declined also. So the unemployment rate is steady, but if you look in the weeds, you see that there's a bear in there. There's a bear in there, and it's called everything is declining. Less people are working, and those that are still trying to work aren't getting jobs. There's less of them working. So what I'm saying is there are more people deciding not to work, and of the people that are still trying to work, those people are losing jobs. If you play that out long enough, eventually you don't have an economy. Don't know when that's going to happen. Don't know if it will. But again, not good signs here. Average hourly earnings were up 0.4% in October, faster than the 0.3% increase in September, lifting the year-over-year rate to 4% from 3.9%. So average hourly earnings were up 4% year over year. They're up 4%. But we know that real inflation is up much more. So that doesn't matter. You can increase the hourly earnings all you want, but if inflation is still higher, you're still getting poor, unless you're investing in assets that are covering the difference and making up the difference. It's that simple. So that doesn't make me feel any more confident about the economy. The Institute of Supply Management Manufacturing Index fell to 46.5 in October from 47.2. So with the Supply Management Manufacturing Index, 50% is baseline. Above it is growth. Below it is contraction, which means in September, we were in contraction level. In October, we're contracting even harder. This is not a birth. This is not a pregnancy, but we are contracting. 46.5, decent decline there. Not a good sign. Led by declines in the index readings for production and order backlogs, offset by gains in new orders, employment, and prices. U.S. manufacturing activity contracted again in October and at a faster rate compared to last month. Okay, just add to that. Also not good. S&P Global Manufacturing PMI was revised higher to 48.5. Decent sign. Okay. From the flash estimate of 47.8 and remains above a level of 47.3 in September. So still in contraction. Little bounce there. Got to see if it holds up. If it holds up and continues to go up, good sign. Something to watch. If it continues to go down, if the trend continues to push it downwards, and this was just a dead cat bounce in manufacturing PMI, not good, because that means the economy is slowing. Things aren't getting made. There isn't demand. Not good. Construction spending rose by 0.1% for the second straight month in September. Private residential construction rose by 0.2% on a 0.4% gain in single-family building. And okay, so minuscule gains. Private non-residential construction was down 0.1% in September. Okay, minuscule loss, while public construction rose by 0.5%. So basically no gains there. And then the Q4 GDP Now estimate from the Atlanta Federal Reserve is for a 2.3% gain, revised down from 2%. So another revision down. All of this to say that things aren't looking particularly great in the U.S. economy. This isn't particularly good data. In fact, I would say this is pretty awful. It could be worse, but everything in life could always be worse. So that doesn't really say a lot about what's going on here. I don't know what's going to happen in the future. I don't know what's going to happen for the rest of the year. We'll have to see how active the Christmas season is. Are people going to go out and shop? Is retail spending going to carry us through 2024, continue to keep this economy afloat? We don't know. But we're starting to see after July in August, we've seen this data continuously get worse and worse and worse and worse and worse. And as we continue to see this happen, we're starting to stack chips. We're starting to stack blocks on the Jenga tower. And eventually, the Jenga tower collapses. When will it collapse? Will it collapse? We don't know. Because the Jenga tower could always go higher and higher and higher. The markets are still near all-time highs. So we don't know, but it's something to watch. It's something to pay attention to. If you appreciate these updates, subscribe to the channel, and yeah, I'll see you in the next video. Hopefully the economy doesn't collapse by the time you watch this. If it does, hopefully you got some money ready to take advantage. That's all I could say. Have a great day.